Hey guys, today we're gonna talk about A.O. Smith, ticker symbol AOS, one of my favorite stocks and in my opinion a great company to buy and hold. In this video I'm gonna talk about the company history, some of their key financial metrics and competitive advantages. A.O. Smith produces and markets residential and commercial water heaters and boilers, as well as water treatment products such as residential and industrial filters. We're talking here about a century-old company that was created quite differently than it is today, and their history is intertwined with the history of American industry itself. The company was founded in 1874 as a bicycle parts manufacturer and quickly became the world's largest manufacturer in that industry. Years later, the company started to manufacture car frames. They even made the frames for Ford's cars, after an agreement with Henry Ford himself in 1906. After that, the company changed business once again. With the First World War, the company started to manufacture the casings of the bombs used during the war and continued to do so during World War II. It was only in the 60s that the company began to manufacture water heaters and boilers, which remains its present activity. Production started initially in Canada, but now the company is headquartered in Milwaukee. The company has a market cap of $11 billion. It's a small company in terms of the stock exchange. It trades at a 28.7 times price to earnings, has a very interesting gross margin of 38%, net margin of 12.9%, and a return on equity and invested capital at around 21 and 20%. It's an excellent dividend payer with a yield of 1.8% and a 45% payout. They are also a dividend aristocrat company for having increased dividend payments in all years for the last 25 years or more. And they have almost no debt with a debt to equity ratio of only 0.1. A.O. Smith has an annual revenue of $2.9 billion, 13,900 employees, and 22 factories, most of which are located in North America. They have a very strong capital position with a significant cash flow from operations increase from 2020 and $559 million in net cash, which is quite a lot if we consider that we're talking about a small cap company. The company has shown solid results throughout time. They are currently the leading manufacturer of water heaters in the US with almost 40% of the market share of residential heaters and 50% of commercial heaters, well ahead of other competitors. When it comes to the water treatment part, they have several products for both residential and industrial use, and this segment has been evolving a lot. An average annual growth of 37% in the last 10 years, and since 2016 this growth has also been inorganic through the acquisition of other companies in the sector. Another interesting fact is that more than 80% of the company's revenue comes from replacements, such as water heaters that are already installed and in replacement, which gives good predictability revenue to the company. 73% of revenue comes from North America and 27% from the rest of the world. The company is present in China, where they have been investing heavily in the last decade and done great business in e-commerce, which represented only 1% of sales in that country in 2012 and today is already the largest distribution channel with 31% of sales. As in the US, the company is also a leader in the water heater segment in China, and in the water treatment segment, the company had a fantastic performance. Market share was close to zero when they started in 2011, and today they are already a leader in the sector, as we can see in the right part of the graph, with more than 20% of the total share. Another market in which the company has been trying to grow is the Indian market, and this is for a quite obvious reason. China and India are two of the most densely populated countries in the world, and with accelerated urbanization, the demand for the company's products tend to grow a lot. The factory in India has been manufacturing water heaters since 2010. Considering the company's consolidated numbers, 53% of heater revenue comes from wholesale customers and 47% from retail. Here we can see some of their biggest clients, which include companies like Lowe's and Ferguson. They serve several customers, none of them with a very large percentage in the company's revenue, which ensures that they don't have to rely too much on any specific customer. In the last decade, A.O. Smith had an average annual increase of 13% in earnings before taxes. Sales had an average increase of 7% in the same period, going from 1.5 billion to almost 3 billion. And here we can see that the company is a very good dividend payer. It paid 17 cents per share in 2010, and in 2020 that amount came to more than 90 cents, which represents an average annual increase of 22%. As a result, earnings per share have increased by an average of 18% per year since 2010, which is a very relevant number for this company. You may have noticed that the company's numbers dropped in 2019, and this was largely due to weaker demand in China related to an increase in inventories at the company's main customers, and also due to the trade war between the US and China. As you could have figured, the company was penalized by the market. The stock price, which was above $60 in 2018, collapsed and came to less than $40 in 2020. Since then, the company has been recovering, and the Chinese market has already shown significant improvement. In the first quarter of 2021, China, which is part of the rest of the world segment, achieved 102% increase in sales compared to 2020. As a result, consolidated sales increased by 21% in 2021, generating an increase of almost 90% in net earnings and in earnings per share. The company has released guidance for the entire year, expecting revenue to increase between 14 and 15%, with segment margins of 23% in North America and 7 to 8% in the rest of the world. So here's my thoughts on the company. They have very solid revenue since 80% comes from replacements, a very strong balance sheet with lots in cash, a strong and predictable demand. They are a market leader with a high share of the market and have a great opportunity to grow internationally, especially in India and China. When it comes to the weaknesses and risks for this company, I think you should be aware that they are going to suffer if the Chinese economy doesn't grow as fast as expected. There's also the risk that comes from the exchange rates of other countries, and obviously there's the trade war between US and China, so you should definitely keep an eye on how that plays out. So, what do you think? Is A.O. Smith a stock to buy? Please let me know your thoughts in the comments below. I hope you guys enjoyed this video. Please don't forget to smash the like button and subscribe to the channel for videos of some of the greatest companies to invest. See you next time.